Good morning, everybody. It's Friday, the 20th of January, and I thought we'll do a quick big picture market review of the markets overall. If I can just we'll kick off with the Dow Jones. Currently, the market successfully broke past the 12,288 resistance area, so it's quite significant, this level. The key thing to remember here is this should now act as support for Q1 going forward. We could come back and retest this back end of February, beginning March, so that's the downside risk. Where are we now in terms of the overall price action? Be on the lookout for this key resistance area. It comes from this midpoint here of this double top here in this market on the left. The 12,625 area is going to be a significant area for the market to test today or early part of next week. After that, the next level we're looking out for is 12,749 and 12,750. So we could see the Dow struggling to get past these areas and then retrace back to the 1288, 12,300 area to come back and test support here around about that point there. We now still have an uptrend based on this trend line here. The market could come back and retest this in February, but be on the lookout for price action. See how the price and volume is doing when the market tests this area next, 12,625 today, possibly Monday, and then early part of next week we could see 12,750. But we could still have a retracement in this market back down to 12,400 over the short term. Only negative here is on the bottom here. We can see the volume is a little bit light on the side here, and this is not the type of volume you want to see, in particularly if you're trying to break past this type of resistance that we have over here. So that's the key thing is here. This resistance over here is what we're going to struggle with going forward. If we now turn to the S&P 500, I've got a couple of lines and levels on here as well. Successfully broke past the 1292 area, this key resistance area. We're now busy testing the 1318 area, which is coming from the bottom end of this resistance on the left here. If the market gets through that, the next level to watch for is 1230. Because that's the midpoint between these two resistance areas. But the significant resistance in the market is going to come here at 1350, and that's a significant area where the market's going to experience some resistance. And when we look at the monthly, weekly chart, we can see here this is part of that tremendous large head and shoulders pattern that we've got. We successfully broke past the neckline here at the bottom. We're now testing the bottom end of the neck here, where there's a whole zone of resistance. So there's quite a lot of sellers that's still sitting in the market at the top end of this head and shoulders pattern. So it's going to be quite touch and go to see if the S&P is going to get to 1350, but watch out for key resistance to come in around the 1325, 1330 area in this market. But so far so good. The uptrend is still in place, but we could see a snapback for the market to come back and retest this 1300 area. So that area could come back and retest that, for example, because this was a significant breakout in the market. Where are we in terms of sector rotation? If we look at the sector report here, we market lock report. Most of the technical indicators are fairly bullish. So far so good in the market. We will watch these very closely and see if there's any significant change in this. That will give us an indication that the market might be pulling back to key support areas. In terms of sector rotation, capital goods still looking strong here with a trend score of 100. It's a pretty high score. Well, that's the maximum score basically, and so we still have a strong trend there. Consumers there we also have somewhat of a strong trend, and financials, funny enough, we have a strong trend. There's mostly from stocks recovering there. Healthcare and materials is an interesting one where I would definitely look at some stock picks in there. That sector is also a very strong trend, and pharma and biotech. So these are there's about 6 sectors in very strong trend with very high trend score. So be on the lookout for trading ideas within those. Sectors to avoid is the services, utilities. These all have very low trend score, negative trend scores. Foods as well. So we see there people are switching out of defensive names and they're switching into potential growth areas. So we do see some form of sector rotation taking place in the market. But overall, for the S&P, watch out for those levels. We're getting to 1220, 25 area and 1230, and then 1350 area, 1340, the zone on the top here. We could see a reversal coming through when we get to that area. But so far so good. Short-term trend is up, but we could see shorter micro trends, micro pullbacks in the market. But be on the lookout for 1320 and 1330 area as key resistance areas in the market. And that's the big picture recap. Just for those that are still interested in going to our options coaching program, go to the tradingprism.com and go to the stock options coaching program. We still have a couple of spaces available for the February the 11th course. And this is a 3-month course basically, so not to be missed. We're going to be covering a lot of index trading as well during that time. Thanks everybody for listening, and until next week, happy trading.